The following is a presentation of TFNN. Now, TFNN opens the door to the futures. Want to see into the future? Climb aboard and come with us. Takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour.
Okay, good morning, folks. This is Larry Pesavento setting in for Ed Young, and we're going to have a special guest repeating. Rich Anderson from Anderson Capital Management is going to join us in about 15 minutes to talk to us about the weather that's going on in China and also the weather here because, as Bernanke said yesterday, we have pretty much got inflation under control. And evidently his wife doesn't go shopping like the rest of us because it certainly looks like things are going higher. The U.S. dollar is going into the toilet, and crude oil is, getting ready to head, looks towards the 122 level, so it's going to be quite interesting. I'm going to do something a little different on today's show, and that is that I'm going to post a link from my good friend Jim Flanagan, who runs the GAN Educators. Jim is probably one of the premier people for, not probably, as he is the premier person for GAN. He does long-term cycles, and basically he has a special report, and he is extremely bearish commodities, in particular silver. And so you can read it or listen to it at your leisure, but he's a very smart fellow. I've known him a long time. He has a huge following, and he's got a great reputation. So if you have an interest in cycles, that's something you want to take a look at. At the end of the show, I'll post it into the den and give you an idea of what he's thinking about, because it's another way of looking at it. It's all related to cycles. It has nothing to do with the fundamentals. Rich Anderson will help us a little bit with the fundamentals because he's a wheat farmer, milo farmer. And he has ranching for hogs and cattle, and these are pretty big operations. So he really knows the business quite a bit and handles a great deal of large size customers for his business. So I wanted to go back to Bernanke for just a minute because when he was speaking yesterday, he talked about how they were for a strong dollar and how they were watching inflation and they didn't think it was out of control, and that they were going to not do anything for the next several meetings because the economy was still weak. Folks, we have to agree on one thing, and that is that Bernanke is not a fool. He's got an IQ of about 150. He's really a smart fellow, and for him to say something like that, to me, means if you read between the lines, he must be seeing something that is a little bit ominous to him. I don't know what it is. And we have to remember, the stock market is not the economy. The stock market is an emotional bunch of guys like us, trying to make a dollar. And then you'll see if that's the case. But anyway, he is a very smart fellow. And the thing is that, why he's saying these things, we might not know it for a while, but it's something that we have to keep in mind. They did have a fellow on Bloomberg that was analyzing his body language yesterday, and he basically said that he wouldn't make eye contact with the people, and that he was always looking with his eyes down to the left when someone asked him a question, which is usually indicative of someone who's not telling the truth. I don't know anything about that, but that's just what this commentator on Bloomberg said. So who knows? I really don't know. I just can't imagine why a reporter just doesn't, ask him and say, well, how can you say you're supporting a dollar when the dollar goes down day after day, week after week? It doesn't make sense. And Geithner was on the day before and said pretty much the same thing. So, these are the politics that goes on, and, that's just the way it goes. Now, we have some important things on silver. We did have a big drop not a big drop, but we have a 10,000 drop in open interest from 56,000 down to 143,000 yesterday, which means that rally, there were more shorts leaving the market than there were new longs coming in. And so that's usually not a really bullish sign, but, we're back to the new highs again. So it's just the first thing that, that we've been waiting for to see if that was going to happen. The other thing that we've been watching is the fact that, the copper market has been under a great deal of pressure. and it really hasn't, rallied along with the rest of the stock market. But we'll have to wait and see. There's really no reason to try to sell long term, for 2 or 3 weeks stocks until Monday, because we're moving up into that full moon coming in on May 3rd. We bottomed on the full moon. We're moving up to the new moon, and this thing has been buy on the full moon, sell on the new moon, which was the opposite of the Royal Bank of Scotland's report, but that's usually the way it happens. So over the weekend, we'll have a pretty good idea of why some of these things are happening the way they are. But we'll have to just to wait and see. We're new highs in gold. We're very close to new highs in silver. We're very close to breaking out again in the crude oil to the upside. The dollar's really in the toilet. So it's really a quagmire of what's going to happen here pretty soon. The one enigma that I don't see is how they can be buying bonds, given the environment of the sloppy dollar and the rest of the stuff. So, but that's the way the markets are reacting, and so you have to respect it and just wait and see. But there should be a lot of resistance at around that 122.15, 122.16 in the June bonds, if that in fact is going to be the case. In regards to the posting that I'm going to do at the end of the show in the den for the thing for Jim Flanagan. If you're not into the Den and you'd like to find it, if you'll go to GAN Educators, www.ganeducators, if when you have time, I'm sure you'll find the link to it. It's a 25-minute video, and he describes some of the cycles that are occurring. And believe me, Jim does really long-term work. I'm mini short-term compared to what he does. He thinks in terms of weeks and months, and he's looking at, the really long 60-year cycle. And he was very bullish commodities a few years ago, and he became, pretty much bearish. He's seeing a lot of divergences in the commodities, much like, we're looking at right now. We're having divergences in rice and divergences in wheat, but, soybeans a little bit, but corn is still really near the highs. And we've had these terrible tornadoes that killed a bunch of people we need to pray for. I think over 200 people have died through the South, and this is affecting the flooding and stuff in the Midwest. And this will affect the planting, because they have to plant corn early, and if they can't get the corn in, they have to switch this over to soybeans. And Rich can talk to us about this and give us an idea if we have a chance for this hyperinflation and some of these things. If you have any questions, you can call in at 877-927-6648. And like I mentioned before, we'll probably have Rich on any minute now. And as soon as he's hooked up, I hope the producer will let me know, and we can get him on the air. And we'll have him on for a little while. Maybe we'll have some questions for him, and I have some questions myself, because he understands the fundamentals better than anybody I know in the business as far as it comes to agricultural products. He's been in the business for 40 years. I've known him since he was 19, so he's been around. His father and brother, ran the farms for years. Well, he was a commodity trader and broker, so he really knows the stuff. So when he comes on, we'll get him on and ask him a few questions. I wanted to say one more thing about Bernanke as far as his, the fact that he's a college professor from Princeton, and he also taught in California. But he is a very bright man, and I know that people think that he's a puppet of Goldman Sachs. Whether that's true or not, who knows? Everybody's probably a puppet of Goldman Sachs when you come right down to it, because anybody that can, a firm that can trade every day of the year and not lose money has some type of an edge that no one else has. So it's going to be interesting to see the long-term future of Goldman Sachs, because they've been around an awfully long time, and they were one of the few people, or one of the beginning people to get the Federal Reserve started again in 1913 from the book of The Creature from Jekyll Island. If you remember Andrew Jackson, he said that the Federal Reserve was more dangerous than standing armies, and he abolished the Fed until it became available again in 1913. So it's going to be, really quite interesting. So These are the things that we're going to be, talking about today with the futures market. I checked the open interest in copper. Nothing really exciting happened yesterday. It's made lower highs and lower bottoms for the last few weeks. And if we have a really bull market in this thing, we really should be, moving up really quickly in the copper, because that's one of the main, main instruments for, rebuilding and stuff. So that's one of the things that, I always watch. The correlation between copper and the stock market is usually very, very high. I mean, it's in the neighborhood of 90 to 95%, and now it's basically, nothing is happening with it. So it's, something that you have to keep an eye on and sort of respect it. We'll be watching the open interest in the silver for the next, 5 or 6 days because of this huge volume that we're having here, and we're certainly having enough promotion from CNBC and TFNN about the, move in silver and the fact that, it's up 900% in a few years, and, everybody's, piling on board to buy it. And, they might be right. Maybe this thing goes to $100 or, $200. Who knows? All I'm saying is you have to be really, cognizant that when markets go parabolic, they usually, end the same way on the downside. So we'll see what happens. We've got a call from Mike in California. Are you there, Mike?
Yeah, I'm here. How you doing?
I'm just fine. What can I do for you?
Yeah, I'm just looking at, I don't own it right now, but I'm looking at JJG, which is basically a play on the grains. And it's been going down, not a lot, but it's down about $1 today. And I'm trying to resolve in my mind why grains would be going down when the dollar is going down, and I would think the weather patterns would be indicating that grains should be going up.
Mike, and I have the same problems because I watch it quite a bit as far as the the different commodities of the wheat, corn, beans, and corn is the largest crop that we have in the United States. And maybe Rich will give us some idea of, why these anomalies are happening. But, I agree that, we should have a big move going in rice. Now, rice, had a pretty good buy signal, about 2 weeks ago, and we've had a little bit of a move off of it, but really not much considering the bad weather we have. So if, if you have a question for Rich Anderson, if you'll call back, when we get him back on the air, we will, are you there, Rich? Are you? They haven't got him hooked up yet, so hopefully.
What I was going to say, so rather than tying up the line, I figured maybe you're going to ask him about this, but I was hoping you would, about why there's a disconnect or a discontinuity between what you would think would be happening and what's actually happening. So
that's one of the questions. One of the first questions that I wanted to ask him is, why aren't the charts, going along with the fundamentals? Because usually when that happens, that's a real serious sign, and that's one of the reasons why I hope everybody listens to what. Jim Flanagan's talking about, because he's a cycle person and he's pretty smart. Thanks for calling in, Mike.
Thank you.
I'll ask him that.
I will be listening. Thank you.
Okay.
Some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back. Rich Anderson, are you there?
Yeah, hi Larry, how are you doing?
Hi, good. Rich, I'm going to take a call from Peter in Utah, and if you'll stay with us, I had some people have some questions about corn, and if you want to ask Rich any questions, you can call in at 877-927-6648. Peter, are you there?
I am, Larry. How are you?
Good. What can I do for you?
I'd like you to look at the euro. I know, using fibs, et cetera, and extensions and contractions, as I look at this, I'm like, it looks like 150 is certainly in play. If not, a rerun toward the top with the 1.272 off the 151.
Absolutely. You're right. That those are the numbers. And if you looked at the dollar chart that I posted in the den, we could very easily, drop another 5%. In the U.S. dollar down to that 67, 68 level, and that would equate to pretty much the same price of 151, actually all the way up to 154, I believe, in the euro. We could actually do that because once the momentum starts in these things, they just don't stop overnight. That's going to be, the real thing to look at. But the dollar is certainly being trashed. By everybody. Even, our officials are, really not supporting it at all. So until that support finally comes in, it looks like it's going to be quite a bit lower. Then we'll have to look at. I actually, what I'm trying to do is just trade the short-term swings. I look for the ABCD swings, in the direction of the trend. So if we get a good ABC correction of, 80 pips or so in the euro, and it makes that ABC formation, I try to, look to be a buyer of that is what I'm trying to do.
It is pretty amazing. Like I said, I was like, I mean, once it took out, really 142 and got past that 6.5 area, I'm like, okay.
Yeah. Well, it was up 200 pips last night, after the close. It just went, the pound or the euro took off, and then also the Australian dollar moved 200 pips, which is a huge amount. I mean, it went from 107 and change to, 109 and a half. So it's had a huge move. As a matter of fact, I've got Rich Anderson on the phone here, and he knows a lot about the dollar. And Rich, can you explain to me, with the dollar getting killed like this, and all the bad weather, and all the strong fundamentals, how we can have the grains down so sharply today? What's your take on that, Rich?
Well, first of all, the dollar's weakness is because of our Fed policy and our government's policy, both fiscal and monetary. And as long as the Fed calls inflation transitory, that tells you they're not doing anything. That's why the dollar keeps getting trashed. The grains are down today, and they were down yesterday on a couple of things. The short term, it's money flow that drives the markets and, overrides fundamentals. Yesterday, we liquidated almost 30,000 contracts of corn. On Tuesday, we liquidated almost 18,000 contracts on corn. Monday night, the corn planting was 9%, and they were looking for 15, average is 20. But all of a sudden, the weather forecasts are changing, and so they assume once it clears up that they can plant 35 million acres of corn a week, and then we'll be back to normal. Well, the GFS weather models is going drier, and the European model's wetter. So there's some conflict. It depends on what verifies. It's going to take a while to get this corn in, but that's why there's been liquidation. I think that the cause of this liquidation, Larry, and it wasn't just in the grains, it's in the meats and across the board, is some fund has reallocated their money to stocks because of the cheap dollars is bullish for stocks and taking it out of commodities. Now, we typically have money flow at the end of each month. Since October, every month, there's been money flow in. We'll have to see. London's closed tomorrow for the wedding. I didn't get my invitation.
I didn't either.
I know. We were lost in the same bag with the president's invitation. And so, that's one last place for money flow to come in. But typically at the end of the month, first of the month, is when new money flows into the markets. But somebody's taking money off. I believe they've taken it off because there's some talk that China will raise rates again or possibly have a one-time change in their currency rate. That was another thing that's in the markets. But the bottom line is money flow. Somebody's taken huge, billions of dollars off the table. Yes. Once they're done doing that, then these grains are going to catch up with the energies and the metals.
Yeah, and so you'd be looking to be a buying opportunity if we sell off any more in these grains.
Well, absolutely. I'm actually nibbling right now, but you have to know what you risk. Hugh knows not what he risks all.
Yeah, that's for sure. What is your opinion of the meat markets too? Because I don't trade them too much anymore, but they're affected by the grains quite a bit because that's how we get our protein. What do you think of cattle and hogs on a longer term? Rich, we got a break here, so if you'll stay with us, there's
no problem.
And one other question from a caller.
Folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gartley, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gartley. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at TFNN.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked, money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to TFNN.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Now, back to the Futures Hour.
Okay, we're back, and we're talking with Rich Anderson from Anderson Capital Management, a 40-year veteran trader, a rancher, and also a wheat farmer and stuff. Rich, in the grain markets, we've already talked a little bit about corn, and I wanted to talk just a short time about the cattle and hogs. Hardly anybody trade those anymore, but is the open interest holding up in these markets?
Yeah, the open interest in the cattle and hogs is holding up very nicely. Pork bellies are all, but they basically are gone. And feeder cattle, it's an index now, much like the S&P is an index, so there's no deliverable. So it's not what it used to be. But I think there's value in the pork complex. The cattle complex typically makes its highs late April, early May, and has, well, on average, 8-10% correction, and we're kind of getting that right now. And then it's kind of like still in stocks, sell in May and go away. No gentleman trades cattle again until August.
I can remember, Rich, about 14 months ago, you were very bullish on hogs when they were trading for about 50 cents a pound, and they've doubled in price. So that must have been quite rewarding for you. So you don't use you only have cattle on your ranch, so you don't do hogs, do you?
Right. The hogs are big factories now. When I was growing up in South Dakota, we had hogs, but now you have these big hog barns. And part of what's keeping the price up is it takes a lot of money to expand a hog operation because you have to build these huge barns, and everything's temperature controlled, humidity controlled, and the banks weren't willing to lend money. So So our livestock numbers, both cattle and hogs, haven't really expanded because the money hasn't been available. Back the QE1 and the QE2 has injected $3 trillion, right? If you look at the Fed's balance sheet, and if you don't think that's caused any distortion, take a look at crude oil in terms of silver and or gold since 2008 when they started that QE2, and you'll see what the injection of that money has done. And of course, those are the big. That's like a aircraft carrier and turning around takes 6 months, a year before they turn something around. And Bernanke said yesterday, we're not going to do it anytime soon.
Mm-hmm. Rich, someone had a question about trading these ETFs, versus the commodities. Do you have any feelings on that? I know you trade straight commodities.
I'll tell you my feeling. I'm a futures trader, always have been. When I was at senior vice president of Smith Barney, there were maybe 12,500 brokers. Less than 500 of them had futures licenses. There's less than 50 that did any consequential business. So, to make it so that the stockbroker could dip into that, they came up with these ETFs. So now anybody can do it. But I trade futures because of the leverage. ETFs are for people that are not qualified. And you got to be very careful, like I don't know what the symbol is, but the double crude oil one, they reset every day. So while crude oil went straight up, if you own that instead, you made very little money. You have to look at how they're constructed. SLV, I think, is one that actually owns the silver, but I only trade futures. I'm a futures trader. That's all I do. But you have to be qualified, financially and psychologically. As you know, a lot of success in trading is being, the carefree state of mind.
Yeah, that's for sure. We learned that from our good friend Mark Douglas, because Rich is also a good friend. Rich, thanks for joining us, and we'll hope to have you on next month. Okay.
All righty. Well, the flow of money will stop being pulled out, and these prices will be different next time we talk.
All right. Thanks a lot, Rich.
Okay, thank you. Bye-bye.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to TFNN.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale on Amazon.com for only $27.88.
Now, back to the Futures Hour.
Okay, we're back. Those of you that have any questions for Rich Anderson, he's a really nice fellow. And he usually has time for people. His phone number is 952-996-0450 if you have a specific question on something that you weren't able to call in on. He's a really long-time friend and traders, and he knows the business as well as anybody that I know in this business. There's one other thing about silver that happened overnight, and that was with Interactive Brokers. Those of you that watch this ZSL, which is the double short ETF for silver. Interactive Brokers is one of the largest stock brokerage organizations in the world, and they do not have any shares to short of that. And I'm not sure the ramifications of that because it being an ETF, but usually if you can't short it, that means that there's nobody there that wants to buy it ordinarily. So I don't know what the ramifications, but they did send a notice out on that. So that's another thing to keep in mind, and we need to watch the open interest in silver because we did have a pretty good drop yesterday of over 10,000 contracts, and it's 143,000 open interests, so that's only about 8%. But remember, we're swinging in silver now, 5% about every 3 or 4 hours. So these are really real wild swings. This is not silver at $13 and $14 an ounce, folks. This is silver trading, pretty wildly up here near 50. Hey, it could go, a lot higher. There's no question about that. But, we do have to keep an eye on it. I had a question from someone that called in while we were on our break about a reversal in the euro. Well, it's only off 80 pips, from its high. So you could hardly call that a reversal. We were up 200 pips. In a matter of 2 hours last night, after the close, and everybody was reviewing, Bernanke's talking about supporting the dollar and QE3 or whatever the things were he was talking about. And these huge moves that we have, all we're doing now is we're just making retracement. We went up 160 pips in 3 hours early this morning, and basically what we're doing now is we're just backing off a little bit. We've got a call from John in Clearwater. Are you there?
Yes, I am. I'd like to know if there's any astro dates coming up in the next week or two.
Yes, John, on Monday, in fact, on Sunday, we have a very good, actually there's two of them. There's two conjunctions of major planets, of Venus and also of Mars in conjunction with other planets. I don't have my ephemeris in front of me, but I know from memory that they're coming in on Sunday. And then we have another aspect on Monday, and I believe Tuesday we have the new moon will be here, so that will be pretty good. And the market's been going. It's made highs on new moons and lows on full moons. So this is the opposite of what the Royal Bank of Scotland report was, and that happens during times, because the market inverts. So, we just watch those dates because, when we came in on the last full moon, we went straight up. So, we'll have to wait and see.
I guess that depends on what cycle the market's in, whether it's in a bull cycle or bear cycle.
Yes. The overall. See, I really believe in the astrology part, John. But the thing is, I've never really found the whole key. I mean, what they talk about, the Holy Grail. I've never found that. I've never even come close to it. All I've tried to do is to find things that work, like the Pesavento index dates work really good. Comburst works really good. Short term, the lunar cycles work pretty good. And then I try to match it up with the patterns. But I'm coming in here into May 3rd, and I'm above all my Fibonacci points in everything that I'm looking at, so it's going to be difficult, to say that that's going to be a, significant top, but this is how they occur, so you don't really know. When the market does finally top, you're going to know, because it's going to be down 300 or 400 or 500 points in the Dow and catch everybody by surprise. That much I really think will happen. We haven't had that. I said a few weeks ago we needed a 200-point down day in the Dow. We got down about 175 that one day, and came right back. So, all it is it's just a good gauge of cycle timing. That's really what it is. And it works pretty good, but it doesn't work all the time. And believe me, I take a lot of heat when it doesn't happen. I'm not like Bernanke. They send me emails saying me what a schmuck I am. So
Actually, I think that the cycle dates give a bias to whatever's going on. So if we're in a sort of like a normalized where you're kind of fiddling around, the astro dates work very good then. But when you have a very, very, very strong bull market, then they tend not to. It just puts a good bias on it. That's what I feel.
That's what I try to do too. That's basically what I try to do. Well,
now about Bernanke, I think there's a lot of misunderstanding about him. He has three primary goals. One is unemployment, one is inflation, and one is the dollar. But the dollar, it's like unemployment is like 50% of his thing, and then inflation is probably around 35%, and the last 15% is the dollar. So when you're looking at all three aspects, the unemployment takes precedence over everything else. And then the inflation is kind of next, and the dollar is at the bottom. He might like to feel that they have, they're doing a strong dollar, but it's always down in the, in priorities. Priorities, you have to look at which of the priorities are most important. And since unemployment is so high now, the Bush administration just totally destroyed this economy and destroyed Wall Street. And now, when you go back, Bush was handed an increasing budget surplus of over $200 billion, and he ended up transferring a $1.3 billion deficit over to Barack Obama. So you cannot change, the momentum of that is hard to change, and it's probably going to take years to really get through this thing.
Well, the only advice I can have for you, John, is stick with the astrology and forget the politics, because I've never been able to figure that out. Hey, listen,
right.
Thank you for
absolutely right.
Thank you for calling in.
Thank you for being there.
No problem.
I really, really appreciate your being on the air.
I'll send you the $20 after the next break. Okay.
You've already sent me the $20 many times over. Thank you very much. Bye.
for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gartley, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gartley. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale on Amazon.com for only $27.88.
Now, back to the Futures Hour.
Okay, we're back, and I had a question while we were gone from Pete in Utah, and he asked about the 1987 crash, if it was related to the currencies. And on Sunday night, the October 18th, I was at a wedding at the Beverly Hills Country Club, and it was one of the market wizards was getting married. And on the way home, I happened to call in to the office just to see what was going on. And the Swiss franc was up 250 points. Gold was up about $40, and there were no index stock futures at that time, trading off. But that was the start of it. It was the currency market. It was mainly because of something that Secretary James Baker said that basically was saying the dollar was no good, and that was the low of the dollar, and it rallied for 4 years after that. We got a call from Mike in Lakeland. Are you there, Mike?
Yes. Hi, Larry. Larry, enjoy the I'll take you off speakerphone, too, by the way. Sorry about that. I enjoy the show, and not to repeat, I really agree with a lot of the other technical assessments that you've done, so I thank you. And I do find curious, though, what I want to share with you is the bond, too. When I look at the TLT, I mean, it looks to me almost like a head and shoulders bottom here formed since back December. But if I can ask you at a fundamental, because I've had other folks ask, and they say, like, well, what would be the fundamental catalyst for the strength of the dollar? I mean, if the Fed's not going to defend it, and then it just seems, and I am very contrarian. I mean, I've never heard so many people now talk about the creature from Jekyll Island and the Fed as I have in the last.
Yes.
I mean, it's almost like, wait a minute, where you guys been? Would this be? And I know this is beyond the technical, but what I've said to folks is, if I was in Australia, if I was the head of the sovereign bank in Australia or Europe or the other sovereign banks, they've been defending their currencies. They're getting killed in commodities that they really can't control because they're all priced in dollars. If I was them, I would sell my currency and buy the dollar and crush the Bernanke.
Well, that could happen. One thing I could add to Mike, to what you said, is if you try not to think about that stuff, you'll be better off, because all of you, honest to God, because, there's so many answers that you could pick that could be right. But if you just look at the price of the chart, prices are going up, somebody's buying it, prices are going down, someone's selling. And once we went below 75 in the dollar, we went above 145 in the euro, gosh, it broke through all the stuff, just like the stock market. I mean, it's, I'm bearish the stock market. It's really hard to be bearish here because, it keeps going up. But, that you just have to wait until you see the whites of their eyes. And I, frankly, in the stock market, all I'm seeing is sunglasses.
Right. Well, good advice. Real good advice.
Yeah. It's just too much to try to think through everything. And that's why being a technician is sometimes better, because you can just look at the chart and say, okay, somebody's buying it here, somebody's selling it here. The story I always tell everybody, look, sometime between the price when Enron was 95 and when it got to zero, they should have said, we've got a problem. But every time that guy came on, Skilling came on, TV, he was saying everything was okay.
Right.
Even till the last day.
It does look, without going through all the markets, it does look like that all of these markets, though, seem to be in alignment. I mean, from the currency,
of course,
commodity. I mean, everything looks just perfect here. Like we're within days of something.
Yeah, it's money moving. That's for sure. I want to mention one more thing about politics, and one of the reasons why I have such a bad taste in my mouth for it is when I voted for the first time when I was 18 in 1960 in the Nixon Kennedy election. My father was a Democratic wheel for the Daley administration out of Illinois that was all part of Indiana and that area. My dad voted 6 times for Kennedy that day. I couldn't believe it. I lost taste for politicians on that day. But thanks a lot for calling in, Mike.
Thanks, Barry.